Hello and welcome to Rajya Sabha Television. You're watching The Big Picture with me, Frank Pereira. Well, after questioning the tenability of an interest rate of 8.65% for subscribers of the Employees Provident Fund Organization for 2016-17 in February, the Finance Ministry is now learned to have written to the Labour Ministry recommending a possible cut in the rate upward of 50 basis points. In February, the Finance Ministry had sought clarifications from the Labour Ministry, mainly pertaining to the EPFO's ability to pay an interest rate of 8.65% and the payouts to be made in case of inoperative accounts. In its reply, the Labour Ministry had justified the payout. In its latest missive recommending a reduction in the EPF interest rate, the Finance Ministry has again questioned the tenability of interest payouts by the retirement fund body, especially with regard to the liability of the central government in case the EPFO is unable to provide for the payments. On this edition of The Big Picture, we will analyze if the EPFO interest rate should be reduced. Joining me on the program today are Professor N.R. Bhanumurthy, NIPFP, Subhomoy Bhattacharya, Consulting Editor, The Business Standard, Ashwini, Rana, Leader, Bharatiya Mazdoor Sangh, and Ashok Singh, National Vice President, Indian National Trade Union Congress. Thank you so much, gentlemen, for joining me on the program. Subhomoy, I'd like to begin with you, of course. Should there be a rate cut as far as the EPFO interest rate is concerned?
Frank, it's something like this. You can't say whether there should be a rate cut. The point is whether the rates should be in tandem with what prevails for other small savings instrument. Basically, all rates of interest in any economy have to be at par with each other. Now, since the Provident Fund rate of interest should be looked at as a part of the entire package of the small savings which the middle class and the lower middle class people use. So if that is the case, then the correct thing to look at is that what should be the rate there. If I look at what is happening with the PPF rate or other comparable small savings, post office savings rates, then you can see that the rates on EPF is obviously on the higher side. And to that extent, there would obviously be a pushback from the Finance Ministry saying, sort of scale it down to a position where the entire number of rates work together. Otherwise, what happens is that you unnecessarily create an arbitrage. People would be, swinging in. Basically, this is salaried income. So basically, people will be swinging money from one account to another. That's not exactly what the small savings is about. It's about providing safety and certainty to the people as a long-term investment avenue. And to that extent, you want predictability. So that is where the debate and the issue should be looked at.
Indeed. Ashok Singh, do you agree with that? As far as small saving schemes are concerned, why don't we have a flat interest rate for across the sector? Why have different rates for different saving schemes?
Today we are here to discuss the EPFO, na?
Yes.
Not all the sectors. Then EPFO is, what is the role of the Finance Ministry and other government? It is the money of the workers. And we are investing the workers' money to anywhere. Now investing to the fund also and the government security also. And what we are getting out of that, we are giving the interest to the workers. We are not Finance Ministry or not government is giving something else to the workers. And by giving 8.63 also, we are saving something. We oppose this. Why not 8.7? Why not 9? Why not 8.7? Please agree it. A Labour Minister is not asking any money from the Finance Ministry to cover it. It is for the EPFO itself. Then it's the workers' money.
What happens?
It is workers' money, and there is CBT, and they have passed it under the chairperson of the Labour Minister, and it is within the limit also, and not out of the limit. Interest what you are giving, you are getting more than that.
What happens in a scenario where the Labour Ministry cannot pay this money and then it has to be the central government?
I don't know. It should not go to central government. If you are asking something else, suppose if you have a stated CBT is asking for 9.5 and we are earning only 9 or 8.73 and 0.5 we want something else from the Finance Ministry, then Finance Ministry comes in the role. Otherwise, it is within the limit, within the parameters, within the earnings, then there should be no going anywhere else.
Okay. Professor Bhanumurthy, the concerns of the Finance Ministry then, are they justified?
Yeah, I think we need to take a slightly long-term perspective on, EPFO rates as well as the small savings. I agree with my friend Subhomoy, where when he has said that the overall interest rate structure in the economy should align with the market interest rates, and that's very important. Otherwise, we may be creating some kind of a arbitrage advantage for few segments of the society who have liquidity. And you see, I think to say that Labour Ministry is not asking the Finance Ministry to pay 8.65% today in my view, it's a very, very short-term view. I think the Finance Ministry concern is towards the medium term to long term, how the mismatch between the EPFO interest rates and the return on the EPFO is actually quite large compared to what other speaker has said. If you look at today's monetary policy report, there is a very nice fine table in page number 41. Even the PPF interest rates or the post office savings rates, right now the difference between the return on the government securities and the return on these small saving rates is nearly 0.95%. So when we compare with the EPFO return, I think it is much more than 1.5 percentage point. So this is the gap that right now I think we are forcing the future generation to pay for today's interest rates. I think that is, in my view, as an economist, is unsustainable, although we are also part of the EPFO.
Sure, fair enough. All right. Ashwini, Rana, all this that is happening between the Labour Ministry and the Finance Ministry, do you somewhere feel that the Finance Minister is, preparing himself to let everyone know that this is what is eventually going to happen? Because last year we saw a similar tug of war between the Labour Ministry and the Finance Ministry, and we saw people as well, trade unions, coming out to the fore and, protesting the move when it was reduced by 5 basis points. So do you believe that this is something that the Finance Minister is doing to prepare everyone that this is what is eventually going to happen?
I think Finance Ministry should know what happened last time. They have rolled back. This time also they want that people should, workers should come on the roads for their demands. And it is, Ashok Singh rightly said, it is a workers' money. Central government means Finance Minister, they don't have any role. When Labour Minister and CBT, they have agreed that we can pay up to 6.5 and 8.65. And after that, more than 400 crores we are having the surplus. What is the problem? It is not the small savings scheme. It is a fund. Whatever income we will generate, we will divide, we will give to our workers. And moreover, whatever 5% invested in ETF, equity trading fund, that income is not included, because whatever income will come, that will further plus to 400 crore. It means sufficient fund is there. We can go up to 8%, 8.8%. Our central union demand is 8.80. But we have agreed that this is manageable. We are agreed. But it is not the role of the central government. They should not interfere. First they will interfere, then they will roll back.
So a rate cut of 50 basis points is unacceptable to you?
Unacceptable.
Okay, okay. Is it too much to ask for, Subhomoy, 50 basis points? Do you think that even the Finance Minister is actually pushing it, because considering what happened last year?
See, the advice from the Finance Ministry is not necessarily the Finance Minister's political call. This is basically the Capital Markets Division of the Finance Ministry giving its opinion. Now, if I look at it as what is being said in that letter, and also previously also the discussion that have gone through, they are pretty much right, because that calculation does show that that the numbers don't stack up. Regarding that 400 crore surplus, it's actually not a surplus. Why isn't it surplus? Because it's essentially on the money which has not been claimed. EPF, where does the EPF gets its money from? EPF gets its money, as Bhanu talked about, gets it from the same set of government bonds which are there in the market. They can, what amount of return can they generate? we have seen what they can generate by looking at what the PPF gives. That it's about only about 50 to 80 basis point above the government securities which the PPF can afford to give. So that is a safe range within which to give. The moment the money, the moment there is a demand to have it higher, I can understand it coming from, I mean, after all, for many workers, because of the lack of the social security net, EPF money is probably their only means of savings. But while that is perfectly right, to allow that savings to be taken out from money which is supposed to be apportioned for the future means that we are eating into future consumption of the same workers' funds. So that is evidently not possible. If there was some other way in which that money could have been generated and extra money could have come through, sure, the finance ministry would say, fine, go ahead with it. But it's not available. The rate of interest is lower.
So in the long run, it's not sustainable, is what you're saying.
I mean, in that rate of interest, because what it does is the EPF cuts into its investable capital.
Sure.
And that means basically you are cutting into what is available for you in future. And it's the same problem which keeps on happening. Today, for instance, the pension fund of the EPF, the EPS rather, is got a gaping hole of over 50,000 crore rupees. That means that entire fund, Mr. Singh is extremely major veteran on this thing, and you'd know that that fund is supposed to pay for the pension. That fund is totally unfunded. The reason why finance ministry talks about why it gets into this thing is because if that fund isn't there, then who will pay from that money for that pensionary requirement? It'll have to come from the general revenue of the government of India. So therefore, it becomes a role of the finance ministry. So you can't say that the labor ministry on its own can just decide on it and therefore leave it at that. If they're providing for future, well enough.
Does that answer some questions for you, Mr. Singh?
Can you say something?
Yeah, please.
Since beginning, when the EPF founded by us, by the government, by the workers, with the workers' money, not a single time, not a single paisa has been provided by the other ministry. Then what is the role of the ministry? Now, so far the future is concerned, so the pension is concerned. Now, take the pension. Now, we can give right to social EPF in the three: PF, pension, and insurance. And this insurance, now, what the EPF is getting, it's 6 lakhs. Another gives 6.20. Why finance minister not getting down 6.20 to 6? He is not asking to LIC to get it down. Unless in EPF, what is the amount pledged is not. We are not going to pay from this amount to the pension. It's something else. Rate of interest is something else, Mister. और इसमें जैसे हमारे ब्रदर ने कहा इसमें Ashwini, Mr. Ashwini ने, it is surplus money is there. By paying 8.63, surplus money is there. And we agree. We are not agree. We are requesting minister, make it 8.80. उनका okay, fine. अभी we are invested 5%, let it come, then we will think over it. And we can give it at that time. Okay, fine. Give it 8.63. In addition to that, we can give, in earlier also, we have given 9.5, not 8.63.
But that's what's left a gaping hole is what
No,
is saying.
not whole. Not whole. At that time also, whole from where? We are asking from any other departments. For finance ministry, from the Ministry of Steel, from the Prime Minister.
But eventually it's going to go down to the finance ministry if this continues.
Why? They represent the finance ministry in the CBT itself. In the rank of joint secretary or additional secretary, man sits there. In their presence, he represents the finance ministry itself.
Members.
Yes, numbers.
Yeah. So,
in his presence, finance ministry is there.
Fair enough.
In his presence.
Okay.
We pass this.
Shubham wants to answer some of your questions that you
no,
raised.
go ahead and I'll come to it when I get longer.
No,
with the
okay,
presence of the
okay.
finance
Fair
secretary.
That government should increase the rate of interest, the other small saving schemes also. Because this is a income for some person. And government insisting that you should invest in this government.
But Ashwini, Rana, is that sustainable? We are all for increasing. See, the government, the RBI is not doing anything as far as the repo rate is concerned. That they do not want to change.
Sir,
or do not want to change.
Play any role in this,
no. I'm talking about other rates. I understand that the RBI has no role to play in this, but then the other rates are not being changed by the government. But why this sudden need to change the EPF rate is something that you want to answer and you want to question, certainly. But is it sustainable having such high interest
Yes,
rates?
it is sustainable, and they should not insist that you should invest only in government securities. We have so many options where we can get the more interest. We can go for bidding for banks also. Banks are giving more interest, but they are insisting for you invest in government securities only. Why? One side there you invest in government security, we will pay less interest, then you pay less to workers. Why? What is this nonsense? When it is a workers' money, let them decide their money to where they will invest. Their board is there, members are there, they are the authority.
Professor Bhanumurthy, is all of this viable?
Well, I think, it's very important to understand interest rates in the economy is not only limited to the EPFO. And the fact that the EPFO has not borrowed money from the finance ministry till now is largely because broadly the return on EPFO is aligned with the economy-wide interest rates. As one of the speakers pointed out, in the past they were paying more interest rate than this because that time even the bank rate and the repo rates were also very high. And we have seen the interest rates are coming down inconsistent with the economy-wide interest rates. So that's one of the reasons the fund is not borrowing from the finance ministry. Now the issue is now
you're not paying high at that time also. You are paying within our limits.
Let him complete. Let him complete. Professor, yeah, go ahead, make your point.
Yeah, so the interest rates, the reason why the finance ministry and the RBI is more concerned is that I think the fact that the monetary policy transmission has become very weak in the recent period is one of the reasons why the finance ministry is focusing on the small savings rate. And I think it's also very important for everybody to understand we need to focus more on the real interest rates rather than the nominal interest rates. I think at least the contributors in the EPFO who are in the organized segment, I'm sure they understand the concept of real interest rates. So we have to ensure the finance ministry or the RBI or the EPFO labor ministry has to ensure that the real interest rates are not coming down, but leave the nominal interest rate to the markets. But somebody said that, why can't EPFO invest in other, securities where the returns are high? I think, again, we need to understand that the high rates of return also combines with high risk. Is EPFO is ready for taking higher risk by investing in the stock markets? I think is something that the EPFO fund managers need to understand.
I'm sorry to say, we are not interested. CBT is not interested to invest.
Let him complete. Let him complete. Mr. Singh, I'll let you have your say. Let him complete. Let him complete. One at a time,
it's
please.
It's a very important issue.
No. You'll get your time to respond.
Right.
Let him complete. Go ahead, Professor.
Yeah, so the recent experience of investing in ETF is really positive, but the economy follows some kind of a business cycle. Not that every time we keep on getting a higher return on our investments. So we need to follow some kind of business cycles, and I think we need to I think it's very important for the fund managers to follow that kind of a cycle. Not necessary that every time we demand more return when the interest rates in the economy is lower.
Okay, fair enough. Yeah, now you can respond.
We never demand more than what we are earning. We never demand. Under the limits we demand it. What we are getting, it should be divided into the workers. And so for the investment in other sector other than the government sectors, we oppose this. We should not invest this money, workers' money to the this stock market. Because certainly he is right, your editor is right. There is a high risk, and then who is going to take risk? If the government is ready to take the risk, here is the government guarantee. You can invest here. We are ready. We are asking. We have already asked. We have left the government. Okay, fine. If the government is ready to pay, ready to take the guarantee, if there is any risk, then he is ready to take the risk. Then we have no objection. But at last, Minister requested us, okay, fine, let us start from the 5%. Let us see the result. Okay, fine, 5%. Initially, when we invested, we are in the loss. When we invested 5%. It's a little bit, after some time, be anyhow we can reach the borderline. This is the way. We are not interested. But the worker is interested to secure the money, not higher interest. What we are earning, we must divide. 9% in past or 9.5%. What we earn, it is under what we earn, we have distributed, not from anybody else. Yes.
Sure. Subhomoy, you can respond to
As the
everything
CBT,
that has been said.
one second.
Okay.
As the
Quickly.
CBT members, as the chairman, the labour minister, we are the chokidar of the workers' money. It is workers' money. Who is working hard. We must respect the human capital.
Fair enough.
It is workers' money. It is not anybody else's money.
Fair enough.
Yes.
So, that, and also, are we headed for another major showdown between the Labour Ministry and the Finance Ministry, or between the trade unions and the Finance Ministry somewhere in the near future?
No, Frank, if I look at it, the way this particular government works, they are more coordinated. So I don't think there'll be any showdown of such. I'm sure they'll work out something which is politically feasible. So, but what will be? I mean, I have no guess, and I think Ashwini ji or Ashok ji would have better ideas on what will possibly be happening. So I'm leaving that out. What I'm saying is, I fully agree with what both of them are saying, that this is the workers' money. It is absolutely essential that when inequality is rising, the workers' interest to ensure that there is a good safety net should be there. That's perfectly right. But let's look at it this way. In the Indian stock market, every pension fund in the world of every sort of worker gets invested. The only segment which doesn't get invested is the Indian worker. You get workers from China, their pension fund. You get workers from USA, you get workers from Japan, you get workers from even as far as Latin American countries. They are not particularly rich, but even they do it. Those ones are finding it reasons to hedge it. Why do they find it? It's not the fault of the workers that in India that they are not able to invest. Why isn't they able to do it? Because the EPF by itself is a very costly organization. It doesn't have the we do not need such an organization with such a huge expenditure to run workers' fund management. It can be done automatically. If its idea is only to invest in government bonds, I agree with Mr. Singh that invest only in government bonds. In that case, why do you need that huge paraphernalia of an investment machinery? It should automatically be invested in government bonds, an automatic investment mechanism using the simple algorithm, and will get the dividends. And that should be used by the computer to allocate it to different workers. The 4 crore workers. What is the EPF organization doing? Why are we carrying that more huge, absurdly extra cost? These are the things that need to be worked on. That's exactly something which the organization is not looking at. The ministry is not looking at. Secondly, which brings the finance ministry. So when you say we are not borrowing, technically it's not borrowing, but when it's borrowing from the future, it's borrowing. As you said, the EPF isn't borrowing from the present, but is borrowing from the future. The fact that it is investing only for the present and doesn't creating any surplus to be able to invest in EPS means that there is a problem there. That is why you find that in successive plan documents, most of the workers take out all their money when they're in the 59th year of their income, of their working life. Why? Because they know that if they keep that money as pension, the pension return will be so low that it's useless. They want to take out a lump sum. Now, what sort of a safety net are we generating in that sort of a circumstance?
Fair enough. Yes. Ashwini, Rana first, and then I'm going to come to you, Ashok Singh. Yeah.
See, it is on the management, CBT board and management, how you invest and how you get the returns. I am working in a bank. This time that bank PF, they have given the 8.75% interest. When a banker, small banker can give, why not CBT? And why ministry interference? They should not insist for their investment. We are against for share market. But this time, as earlier said, that this time the dividend on ETF, it now considered as an income of EPFO.
Sure.
If that will come, we have a more than surplus money.
Fair enough. Yes. Yes, Ashok Singh.
I agree with that gentleman who is asking that in Germany, in China, there is a trust, but Indian workers, they don't have any trust. Sir, we have demanded. INTUC come first. Like Germany and China, there is a worker capital trust. It should not be managed by the government. It should be managed by the workers. The workers' money, it should managed by the workers only. Worker capital trust, then the BMS people come with the workers' banks. But government it is not passed by the, it is not agreed by the government. Then what we to do? Actually, worker capital trust, it is workers' money. It should be organized by worker capital. Like China and like Germany, there is no EPFO, there is no CBT. Workers' capital trust. We want this. I agree with you. Help me. So that there should be worker capital trust in the country also.
The man who will help you is behind you.
Behind you, behind
The finance minister.
He's talking about the finance minister. Yes.
As a finance minister. And behind me, he is far away. I am behind him.
He changes to the labor minister.
Each country,
Right,
each country has a finance minister. Like said,
Let's not get
we
swayed
want,
away. Yes.
It is the INTUC first proposal to the government, to the trust, that there should worker capital trust like the Germany, like other country, where there are experts. Capital trust to ask the work experts where we should invest the money to get more returns. These are idle things. They must do it.
Sure.
Workers' money, it is a pure 100% workers' money belong to the workers, and worker capital trust should manage the workers' money.
Fair enough. All right. One final quick comment on the program I have time for. Let me go across to Professor Bhanumurthy. Your closing concluding remarks on the program, Professor.
No, I only have one simple question in this context. Is there any instrument or fund which gives a return of 7% or 7.5% at the moment? I think that is very important for us to understand when we go for demand. In any case, I think that the Labour Ministry and Finance Ministry always have this argument, and finally, I'm sure they will come out with a very amicable solution and bring out an interest rates which is consistent with the overall macroeconomic conditions.
Okay, fair enough. All right. On that note, I'll have to call it a wrap on this edition of The Big Picture. I'd like to thank all my guests, N.R. Bhanumurthy, Subhomoy, Bhattacharya, Ashwini, Rana and Ashok Singh. Thank you so much, gentlemen, for being with me on the program and putting things into perspective for us. That's all the time we have. See you again next time.
Thank you.